Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is Monday, TGIM, and the markets are all over the fun place. We got it all going. Boeing, the stock, it makes those airplanes that fly in the sky, burning the heating oil. Just offered out more stock because they're on strike right now. They've been on strike, I think, like 3 weeks. They're a major component. Well, they're a big component in the Dow, I guess you could say, because it's a $155 stock. So it definitely influences it. And so there's a little pressure on the market now. Market was up, Dow was up about 220 points. And now it's only up like 100 points. So kind of smoothed it out a little bit. You can see it on the S&P 500. You can see it, a lot of different places. Let's see. Let's get this out of the way. There we are. There we are. Just double checking the chat line. There's Robin. Good morning to you, Robin. All right. Yep, there we go. I can make sure I heard it all. So, yeah, we're seeing a little pressure on the market. Nothing major on the stocks. They started to lift up Tokyo or something like that was basically flat. I think they changed the government. We talked about it off and on. At first it looked like it was going to be a changed government. It was going to be two female prime ministers fighting for the job. Then it broke away and then it seemed like it was back to normal again. And then obviously the voters said, no, definitely not. And so I guess the LDP is in the minority now. It's not really clear. We'll have to look at that a little bit closer. But we'll see. See how that all plays out. For the last, 2009 to 2024. That's 15 years. So whatever part of the party that was in charge is out now. That's what it comes down to. So let's see. Take a look at the dollar index. Let's show you that. Oh, you can see it right there. Dollar index is pressing down. We're actually after, what does it say on the, well, let's move the spreadsheet over. There's a spreadsheet. You see 20 days in a buy. 4 weeks in a buy. Still in the buy with no problem on a weekly basis. And you can see right here, the, what are they doing here? Right there. You can see we're trying to press down a little bit. The histogram is definitely dropped in the minus. The slow has dropped below the manifold. But over here on the weekly, they're not moving it too much yet. I guess we could take a look at the bond, because that's the answer to this whole thing. There is a little fear out there that we're going to start to get another wave of inflation. That 0.5% cut was a grave mistake by Mr. Powell. You can see here they knocked it down. In other words, when this is going down, this is the price of the bond. In this case here, it's a 30-year bond. It made another new low overnight. It's like, it's like they just don't know how to get out of their own way. They keep on making mistakes. There is serious talk, though, even on people that are very pro, spend every dime we can spend. That there'll be a problem if Mr. Powell has to start raising rates again. And obviously the market did it for him. So in other words, he officially knocked the price down 0.5 percentage point, but it went up almost 0.75 percentage point. So when people go to look to buy mortgages, the institutions that float mortgages are not floating them at 0.5 percentage point lower from that cut. They're doing the opposite. They're actually have raised it up 0.25. So not only did it not lower mortgage rates, it actually increased them a little bit. And there's a lot of nervousness about that. And, you have the election starting, next, we've been in voting now in America. The Democrats have made it to a point where we vote for about, 3 weeks. We're voting for 3 whole weeks. All kinds of different odd votes come in, be mail or early voting booths. And then supposedly November 5th is the official finality of the voting season. That's what we're calling it now. We have a voting season that starts about 3 to 4 weeks before the final day of voting. So that comes up next Tuesday. So at this point, Republicans are leading the Democrats all across the nation, and we'll see how the actual final election day works, where they get more votes, even more votes coming out. We'll find out. All right, what else can we say about any of this? I guess that's about it there. What did I have? I had something put up. I wanted to talk about it. Let me see. Let me see if I can find it. There was something I was looking at. Where is it at? It was... No, not there, not there, not there. Maybe it was there. And it was... Basically, I guess it was the PAL stuff I started off with. The concern that they've blown it. Oh, I know what it was. It was, where's it at? It is something new. Oh, I know what it was. It was the BRICS. That's what it was. It was the BRICS. Over the weekend, there were, they had gotten together, the BRIC countries, last Wednesday or Tuesday or something like that in Moscow. They had a nice conference. And then a lot of stories, and I think I saved some of them. A lot of stories. I did save them. Let me put one of them up on the screen here. There it is. So I get that one. How much do G7 and BRICS countries rely on the Taiwan Straits? I thought that was interesting. And the second one is... Let's see... No, we're going to get there. There it is right there. Russia's landmark BRICS summit and the specter of dollarization. Or de-dollarization. So we got these two. Let's put them up on the screen so you can see them. Because I think that's a conversation that needs to be had, when it comes to the BRICS. They act in many ways. Let's see if we can go like this. There we go, like that. And then what do we do here? What is that one? That's Thunderbolts. Let's get Thunderbolts out of the way. There it is. And let's do the first one, which is a nice picture. There it is right there. Since we start off with currencies, I think it's well worth having the conversation here about the BRICS. We talk about the BRICS all the time. And we don't really see a lot of positiveness from the BRICS, but hope is eternal. You never know. Sooner or later, they could get their act together. Now, as someone who was actually part of creating the euro, we had the euro unit and proved that it worked to a certain extent. We didn't expect, the way Brussels has turned it into a very odd situation. But we were very hungry to have competition here in the United States. In 1944, we became the world reserve currency finally. I'm not sure we ever wanted it to begin with. But the rest of the world was devastated from the war thing going on. So the dollar took over the British pound's position as the world's reserve currency. As you can see there, Russia landmark BRICS summit and specter of de-dollarization. And all these articles seem to talk about like it's a competition, in the sense that one can only exist, not two or three. We in the United States, as professional traders, believe that two or three or four even could exist. So in other words, it would take the burden, and I'm going to repeat that really loud. What a burden is when you have to do something that really hurts you, not helps you. And we find being the world reserve currency hurts us more than helps us. It messes with our fundamentals to start off with, because we have money supplies, and we're trying to follow those money supplies on following how much cash is in the system. And when you're the world reserve currency, you get stuck having more cash out there than being used domestically in the United States. It's being used around the globe. which interferes with us trying to understand our situation economically. So we're not really happy about it for those reasons, and that's why we wanted a euro unit. That's why it's called, and now they call it the euro dollar, pairs trade. But it's a euro unit. It's not a currency per se, but it is a currency because it's an accumulation of, the French franc and the Italian lira and the German Deutschmark, and it's like a combination of all those things put together. So, and there's the other countries in Europe that use it at the same time. France, no more French franc anymore, and so forth. So then the second article, because they talk about it like as if it's going to be 100%, which is absurd. It's not going to be 100% of anything. Then the second one was they started looking at the mechanics of the BRIC nations and how, capital will flow and how actual imports and exports will flow in ships. How much does G7 and the BRICS countries rely on the Taiwan Straits? And it's obviously, it's very important on both of them. You can see this here with this. See, let me get this. There it is. There's Japan, and you can see there's China, UAE, Iran, so forth, Egypt, South Africa, so forth and so on. They're the BRICS, and then here's ones with Italy and Germany and France and Canada, the G7. And so my point, and I'm not going to labor on this much more than this, my point with both of those articles is that it's not monolithic. The markets will find a way to arbitrage because money is like, is always looking for the best return. And so, it's a combination of all of it. So as far as I'm concerned, bring it on, BRICS. Have a currency. Try to satisfy the nations that want to use it. And there'll be nations that want to use dollars, and there'll be nations that might use gold, and there'll be, whatever. Let it flow. Let the markets make the decision in the end. You know what I'm saying? Let the markets decide. And as much as the bureaucrats who mess things up most of the time, if not all the time, remove the bureaucrats out of the equation and let the people decide, because that will be the best way. Because bureaucrats spend your money, people spend their money, and when you have people who spend your money, they spend it like, as we would say here in the States, drunken sailors. Okay, and so in other words, irresponsibly. And so that is my statement about it all. In other words, just let it fly. Stop trying to pretend that you can just hit a switch. To start off with, how does China become a world reserve currency unit until they stop locking their currency or fixing their currency every day to the dollar? That alone is a magical thing that should be discussed that no one discusses but me all the time around here. I never see articles on it, just that they go, well, it's a fixed currency, and the Bank of China, the People's Bank of China, fixes it each day. They declare what it's going to be. It's like, no, let the market decide. Let the people decide, not the bureaucrats. All right, we're done with that. Let's just go back over to, let's do this and minimize that to there, and then jump back over to here. Beta is down again. Right now will be, my son was out in Vegas, Las Vegas. Viva Las Vegas. Playing Magic cards. I understand he's placed pretty decently in an international event in Vegas. And there is the, what is it? That is the bond. At least the bond is rallying back up. Stock market's doing the same thing. Let's just show you the stock market real quick, and then we'll jump over to the euro. See it coming up right there. Here's the S&P 500. You can see this is like from just let's do the whole picture. There's the S&P 500. It was up in here. I think if we tighten it up, you'll see it was in the low 80s, right there. There it is. 580. The high, I guess now is like something like 584.50, and here we are at 58876 and a half. So, it's coming back up from the lows there it were set when Boeing floated some stock into the market. That's how funds function. When you have more stock outstanding, you have to lower the price of it to match the earnings and so forth. Exactly. All right, from there, let's see. Let's go back to the currencies now. Back to the currencies. Back to the future. What is that? That is the Great Experiment. It's doing a little bottoming in there. Let's hope it doesn't stay there long and finds a way to go lower. This way the people in Turkey will be making out better, not worse. Here's the euro. You see the euro on Thursday went into the buy. Friday it stayed in there because we had a green and a red, even with it underneath the zero line. And here on Monday we are, what are we are? We are moving back up again, trying to get back to the Thursday close. You can see here on a weekly, this is the 4th, 5th. This is starting a 6th week in the sell. You can see it right here on the spreadsheet. Right there. There's the euro. Starting I guess the number's wrong there, isn't it? It should be 5, I guess. Is that right? 2, 4, 5. Yeah. I knew I screwed that up on Sunday or something like that. I remember that. That's 5. 5. I think that's what it is. Yeah. And you can see 2 days in a buy. Now we're on a 3rd day. And you can see the cable. Cable's playing the same magic. It's got that same thing going on. Right there. And that is also, there's a 4th week, just like it said up on there. And then at the same time, we are starting a 5th week. Now look how extreme the weekly is. It's way down. So you got to assume that we may bounce up. And when we bounce up, that could put pressure on U.S. stocks and everything else to go up in value, not down. And at the same time, we have the election coming to a final conclusion on November 5th. I've already voted myself at a voting booth early. That's what we're doing nowadays. We vote throughout the whole month. I guess the 30. It's not a month even. It's like a month and it's it's like 4 weeks. So that's what we're watching now. Have another sip of that tea too. Cable trying to climb into the buy. It didn't do that on Thursday or Friday, whereas the euro did. So maybe we're going to start to see some strength again. When we look at, sorry about that with the tea. Let's see, where are we at? We want to see. What do we want to see here? Yeah, we're seeing the strength here. Oh, I know it is. The bond, and also the dollar right here. And there's the dollar. Let's just show you that again. There's the bond there. It's trying to get back to flat here this morning. For the dollar is already, just like the bond vigilantes, it's already racing past that point. It's saying 20 days in a buy. Time to let it breathe, let it breathe. Now, at the same time, you can see our histogram above the manifold right here. You can see here the fast has broken about a week and a half back. It's going after the manifold, and look how high up. It's at 1.44. We can't really go back and see, I guess. Oh well, that's sad. We'll have the beta back up in a couple hours, and that'll straighten everything out. Let's see. Where are we at here? Right there. Okay. So, what else can I say about any of that? I guess what it really comes down to, beta still down. Beta platform. There we go. Maybe it'll get turned on while we're in the middle of this webinar, and that'll be nice. Let's see what else we can say about that, all that. I guess that's about it. So we see the bonds trying to get back to zero. In other words, getting back to the flush line of today. At the same time, you can see here the dollar side of it. You can see the euro being strong for, in this case here, it's the cables finally lifting up even more and above the Thursday close, whereas the euro is still battling to get up to that point. But they're both trying to turn. And that's the interesting thing, is that that sign, when they try to turn like that, we assume that means that interest rates are are going up in Europe, and the United States is cooling off, and that's why that 30-year bond is showing that it's getting up towards the zero line again. In other words, they sold it off this morning, and they said, nah, this is not real. We're done. I think the bond vigilantes don't care at this point. I think what they've done is they've priced in. This is the amazing part about it all. They've priced in the inflation coming. That's what they've done. They've actually priced in the inflation coming. That's exactly what they've done. And I know a lot of people say, well, how do they know? Well, they follow the numbers more accurately than the Federal Reserve does. Remember, the Federal Reserve is a bunch of bureaucrats, controlled by politicians, elected by politicians. So in other words, it's not the free market, free people type of thing going on. And so there's a lot of sloppiness when it comes to decision making there, like how he raised it a half a point, and the bond vigilante said, no, we're the traders here, we're the market, you're just a government bureaucracy, and you can label it for 0.5% lower, but we're not going to trade it there. And that's what they chose, because the bond market is so more enormous than everything else on the planet. It is the largest market in the world, and the only thing that gets close to it is the currency market, is about a quarter of it in size, and then like the oil market is like I don't know, 3% of what the bond market is, something like that, 2%, right around there. The stock market is so small; it's not even a percentage point of the they have $6 billion trades for the day, or $9 billion trades for the day in the stock market, and they have $100 billion trades in an hour in the bond market. So it's nowhere near the competition. So that's where we're standing here. That's the fundamentals. The bond traders follow the fundamentals so much better and so much more accurate, and then you got the bureaucrats, in a sense. They're messing with your head, because they're telling you they're doing things that they don't have power to do, and they can mess with the official rate. That's not hard to do when you're you have money to throw at it, but you can't make the market itself respect it, and that's really what it comes down to. Matter of fact, I think that's going to be the title today, because we've made it very clear that there's no battle between BRICS and the G7, really, in all honesty, when it comes to traders. It's only the bureaucrats that are fighting it. And at the same time, you can see the bond market doesn't pay attention to the bureaucrats very well. They basically say, no mas, not interested in your craziness, stay away. And that's what happens. So I know it seems to be a little magical at times. People go like, well, why don't they? Well, there's no listed market. It's an over-the-counter market. It's not like there's an exchange that trades the world bond market. That's what gave the power to. That was one of the great tools of the Bloomberg terminal, is that it showed as more quotes than, let's see, Google storage. No, I don't want to care about Google storage. Get out of my face. I'm trying to go to WhatsApp, and it wants me to go to Google storage to back up. I don't want to do that. And it's incorporated. Done. Choose backup frequency to continue. End-to-end encryption backup off. Let's see, backup using cellular. No, I don't want to do any of this stuff. Never. There we go. Done. There we go. Now we're going to put the title in right now, because it's right in the forefront of my mind. And then we'll go on to, while we're doing that, let's put up the great inflation fighters, the Swiss. There it is right there. You can see that. You see it's flirting with pushing into a sell, and you can see that it made almost the identical move to the bond traders in the bond market. Notice that, it had a high, and now it's down at its low. Whereas in the bond market, right there, not there, right there, it's doing the opposite of that. Down there's the low, going to the high. And who else would you think? I mean, obviously, what a great example of it all is that the Swiss uh, central bank and the inflation fighting machine there is so much more efficient than like the Federal Reserve or Brussels. I mean, they're just a bunch of politicians, just trying to manipulate a market for political reasons, not for financial reasons. And you think about it too. The Swiss realized this was going on. They didn't play the stupid game like the Federal Reserve, walking around for a year and a half saying, "Oh, inflation is transitory. Don't worry about it." Yeah, it ran all the way up to historical numbers. They recognized it. The Swiss bank recognized it. I pointed it out how well they recognized it. They borrowed money from the Federal Reserve. They went in and tightened up their market. The currency went to 101. And then it worked its way down because they worked it down. And when you look at, I know this is a funny thing to talk about, but the McDonald's hamburger, the Big Mac, and they take the price of every Big Mac in every major capital in the world, and they look to see who's the most expensive. And the year before was the Swiss. That's right. I guess in Bern or wherever, what do they consider capital? Probably Geneva. They said, well, the McDonald's burger in Geneva is the most expensive in the world right now. So the Swiss realized it a year and a half back now and straightened it out. And now you see the Swiss trading. Let's go put the Swiss back up on the screen. You see the Swiss trading at 86, looking like a big rally, right? Ooh, my goodness, no. But it's not at all. Look at it, because the Swiss had enough common sense to fight that inflation. Look at that. There's 92 on the screen. And it's bottomed down in the 84s. This thing came down from the 101s. We're just going to keep on squeezing this. See that? Look at that. 101 area. They realized way back here, they knew better. That's why I say all these central banks should have to hire. You want to make bureaucrats do something that makes sense for a change? What we should do is every central bank should have one Swiss banker on it. Because obviously they show lots of common sense. Who knows? The Polish one is not that bad either. They could use, maybe they need some foreigners on these central banks, because obviously the domestic people are way, way, way too involved in the politics, and they're hurting the population. Inflation is a killer. So, that's my gist of it all. Yeah. Look at that, down in the 86s, bouncing off the 84s. It was 101. Wouldn't Turkey love to have a fall like that? Can you imagine? That's a 12% drop, right? What is that? It's even more than that. It was a 16, 17% drop. How about you take 40, right, and put a 17% drop in that puppy, and you're moving down, baby. You're down in the low 32s. I mean, wouldn't they love to be at 32 and never have seen 40? Imagine if they had done it when it was at the 36 area. At the same time, where were they a year and a half ago? Let's take a look at the Turkish lira. The inflation's a killer. They've had this spike now all the way up into the 40 area. But when we go back a year and a half, it was in the 30s. This is how much punishment these poor people are taking in Turkey from their political leadership. It was in the 29s and 30s. Wouldn't it have been nice if it dropped 17% then? You're talking about 17%. You're talking about being down to 23 or 24, not 40. 40 lira to the dollar? Right now it's trading at 37 lira to the, I'm sorry, not the lira, dollar, 37 lira to the euro. I mean, I can only say, look, I've been really impressed with the Swiss jumping ahead of the curve. I've been very sad about the Federal Reserve falling behind the curve and being totally lost, to the point where they've lowered the rates a half a percentage point, and the world trading market laughed at them and raised them on them 3/4 of a point. So they lost basically a quarter point by dropping it a half. They've been like, whoa, guys, don't do the stupid stuff, The world was comfortable with a quarter point drop. Wasn't happy about it, and I knew I've seen a lot of economists that I trust for decades now that said don't do it at all. But a quarter point drop seemed to be in the cards because the politicians were pushing for it. They go and do a half, and the market told them, you're wrong. You're long and you're wrong. And that was it right there. All right, now let me finally get the title of today's webinar. So today's title, today, bingo, bango, bongo, will be, it was fresh in my mind a few seconds ago. G7 and BRICS should compete. That's what it comes down to. Because the markets should be free. So free markets, in a free market, BRICS and G7 compete. That's what it is. G7 BRICS should compete. There we are. And that's the truth of it all, really. So, from there we go back over to, from the Swiss, right there, after, singing their song, let's go and check out the yen. There's the yen. Yen's kind of flattish. I mean, you can see they did the little spike just like the Swiss did, and now they're chilling a little bit. Maybe they're happy that a new government is in Japan. So to me, that sounds like a positive thing. I don't see a lot of stories coming out of it. There is one or two. I had Nikkei News on earlier, but they just kind of like skim over it. They don't really talk about it. You type in Japan, it doesn't say anything about the election. Just shows you how much the bureaucrats control things. Let's see what that says here. Okay, Japan's long ruling party loses majority in stunning election defeat 6 hours ago. And so, let's see, Japan's ruling party loses the majority in blow to new prime minister. Okay. Let's see, Japan voters have issued several judgments. The Guardian, I don't know if I can trust it. The Guardian or BBC or Reuters. Let's see, Nikkei Asia, Japan election, how a bad night for LDP unfold. That might be a little bit better. Let's see if we can look at that one. Okay, here we go. Let's see, there it is. All right, now let's see. We'll put this up on the screen real quick, just to show you. And you can see the market doesn't really care. Ruling 215 is, and the opposition parties all put together is 235. Now the question is, can they need a threshold of 233? So the bigger question will be is, do they still stay in power? The opposition parties all have to agree to be the opposition parties. That's the problem. And so we'll see how that plays out over the next couple of days. All right. So there is the yen. Let's see what the Nikkei did too. And the Nikkei, let's see, where's that at? Right there. Let's see, Nikkei. Let's see, it's an N. 225. Let's see what that does. There it is. So the Nikkei was up 700 points. So it's, you would think with that headline it was like, oh, the world's coming to an end, blah. Instead, the stock market rallied from it. Money saw an opportunity that maybe they won't be hamstrung. They may not have their hands tied. And that's the free markets are what it's all about here. That's what I talk about all the time. Free markets, free people. And you can see that nice spike there from the news of the election. You would have thought that the way they put the headlines out there, that the world is coming to an end or something like that. Yeah. Okay. So, back to the currencies. There you go. And so there it is right there. You can see the yen again. And we're real happy to see that the stock market there and everything else looks like maybe it'll If the stock market rallied like that and they're trying to sell the currency back down, in other words, when the currency is rising like this, it's losing against the dollar. For the fact that it peaked there and is trying to come down, if we can get into there it's pushing into a daily sell for the first time in, what's the spreadsheet say? Right there. 17 days. See that right there? 17 days in a buy. Maybe we're gonna, it's got the volatility signal too going on there at the moment, the green and the red. So maybe we'll see some downwardly pressure. You can see the fast is trying to break the manifold on the weekly right there. You see that right there, and you can see the green as is underneath with the histogram. So on the daily. So this could be a very positive thing. The currency starts to get bought. People buy stocks. There's growth in the economy again. All that magical stuff that is good for markets. When it comes to free markets. Free markets, free people. All right. From there, we jump over to. We looked at this already. This is the Turkish lira, and you can see here it's trying to lift up a little bit. We're hoping that this is just a dead cat bounce, and they keep on finding ways to go lower. Oil, if we'll show you oil and energies, but last I saw, oil was down like $3 or $4. The Israelis basically showed Iran that they can take out the country in a heartbeat with conventional weapons. They sent 100 planes to Iran. They bombed all these interestingly strategic places. I don't know how many wounded there were, but there were only 4 soldiers dead because they bombed things that they wanted them to know that they can bomb. Like they bombed the first nuclear facility that isn't used anymore. They bombed that and turned it into a big hole in the ground. And so they probably reminded them that not only can they bomb, supposedly they everybody thinks they can't bomb the nuclear facility where they have it now. It's under a mountain or something like that, and it's, I don't know, 10 stories below. But then we saw in Beirut, they took out the Hezbollah headquarters that was 7 or 8 stories below, and they pounded it until there was nothing left. So they better think a couple times, because what they may do is just sink everything around it, and then it'll be just sitting there, and then it'll be just an open target. So the oil fell down. Matter of fact, there was a terrorist attack in Israel today. 1 person dead, something like 36 injured, and no one's claiming responsibility. So they've realized that bragging about attacking Israel doesn't exactly help them any. And so, peace would be better. Matter of fact, the Arab leaders in the United States are backing Mr. Trump now because they say he talks about peace, not war. Whereas Kamala Harris talks about, not really sure what she talks about it, but let's put it this way, they can tell what Trump's saying, and they can't tell what she is saying because she doesn't make any sense. So, from the Turkish lira, we go to the South African rand, which we consider the second biggest brick in the world. And you can see here, it's on that trajectory sideways more than down. It was on a slide up. You can see it from here. And then there it seems to have topped out. Now it's just kind of bouncing around and trying to push into a sell, which is a good thing. We would love to see the weekly. The weekly went into a weekly buy last week. That is not a good thing for the metals market. But we keep on thinking that Mr. Trump gets elected, the metals market may just literally chill out. It may chill out, and you might see a $2,300 or $2,400 gold again. It might back off. So from there, we start looking at the metals complex. Let's go check them out. There is, no, not there. Right here. There is copper. Copper is basically flat for the day, but playing with its weekly sell. And it's flirting with its daily buy. So we'll see how that plays itself out. Obviously, it could be very volatile. We've been concerned about the ghost city stimulus situation. And then you can see here's silver, which is in a sell for 3 days. You can see it on the spreadsheet somewhere in there. Where is it on the spreadsheet? Right there. We're looking at 10 weeks in a buy and 3 days in a sell. You see it here on the screen. And there's a little pressure on it. We'll see how that plays out. Matter of fact, in many ways, I thought this was like a blow off top with the way they took silver up last week. Running all the way up to almost the $35 area. So, and then here's the gold. Gold's like steady because it is a competitor with the BRICS and the dollar and the euro. All four of them really. And we keep on expecting to see gold be more stronger than all the other metals because of the central banks themselves are playing with investing in all four directions basically. People buy European bonds, they buy American bonds. They don't really have the opportunity yet, but Mr. Putin introduced a brick note. So that'll that's how a market's supposed to function. Provide it, give people an opportunity to trade it, and see if they get a return out of it. And if they don't, then they'll walk away from it. And if they do, they'll stick with it. And then you have the gold itself. So you have gold, the euro, the dollar, and now hopefully the BRICS will get their game together and start to become more functional. They don't seem to want to listen to normal economic policy. So the next magical thing is, let's see what they do with with the BRICS. Right there, we've seen the silver, like I said, and there's the gold. Let's go take a look at the platinum. And there's platinum. Platinum tried to get into the sell on Friday. You can see it's got a green and a red, and now it's lifting back up again with a red dot. And we're still in a weekly buy. So we're not, convinced that we kind of think that platinum in the end is going to lead us in more ways than one. And so we kind of say this is like the most dangerous short in the world because, it used to trade at parity or over the gold for decades. For decades upon decades, it traded over it. Now it's trading at a 60% discount, or what we call haircut. Yeah, a discount. Yeah. Yeah. I mean, that's like wild, That is really wild. So be careful, traders who are playing the platinum or trading the platinum, because it could explode. Explode. All right. From there, we jump over to the energies. Look at that move there. This is the December contract. It's being smoked. Smoke 'em. Look at that, pushing into the sell with no problem at all. Friday, it was very close. You can see that. It was at, what was it at? On Friday, it was at 0.01, and the green was at 0.03, and the fast was in a minus. That's interesting, because we don't usually pay attention to those on the daily. And you can see here, it closed in the weekly sell on Friday. So, smash-a-roo today. Smash-a-roo. Do. And I think in the, I can't wait for our beta to be back up. Let's check and see if our beta is back up yet. Let's see, what is that? Let's get rid of that. And let's see if he picked up on that. I don't see that. Let's see. I'm just going to try to turn it on and see if it works. And the answer to that is, go like that. No, not yet. Still not ticking away. Alrighty. So from there, we shoot back over to, let's take a look at the Brent. And the Brent is probably looking the same exact way. What's that? That's a BZ, I think it is. Yep, there it is, BZ. And you can see Brent has done the same punch down. Just a slam down to 71. Let's put it up on the screen there. There's right there. Driving it down to these lows now. And when it comes to West Texas, let's put the West Texas up there. And that's CL right there. doing that same gig. They're punching it down, going after the same low area. So we're in a weekly sell, and you can see it also back over here on the main platform, or the old platform, because I think beta is almost ready for prime time, without a doubt. That's why we want to give it away for free for a little while, just to keep on bench testing it. It's the only way to. We need guinea pigs. Wee, wee, guinea pigs. There it is, right there. For free. Be a guinea pig for free. Punch on it, see how it works. All right, and there it is right there. You can see that's, that pressure we're talking about. And then from there we go over to heating oil. There's the heating oil. Now that's been in a weekly sell for, since back in here, 3 weeks back, just like our beta has it on the oil. And you can see here it gave us a warning of a volatility, and then today they're smack-a-doodling it down into the lows here. It's down, I don't know, let's see, it closed on Friday at $2 and almost 25 cents. And this morning you can see it's trading at $2 and basically 15 cents. So it's down 10 full cents. That's a lot. That's a 3% drop, 2.5%, 2.3% drop. Basically, smack-a-doodle. It's smackaroni. Beef and macaroni. Yes, and the weekly sell for starting a third week. All right, and then from there, we go over to Nat Gas. Right there, there's the December contract, and it's feeling the pain the same way, but it's been in a weekly sell now, 3 full weeks, starting a fourth. So, this daily buy just kept you from being trapped on the short side right here. That was it. It sure didn't. Let's move it over one. It sure didn't tell you to be long unless you were like in options or something like that, where you can have a limited risk factor. But when trading the hard delta, in other words, the contract itself nakedly without option support, then it's like, woo-oo, ruh-oh, Rorge. So from there, we march over to, what do we got here? Let's go didn't we put Exxon Mobil up there or something like that? I thought we did. Let's see if we can find Exxon Mobil. Okay, we're going to connect it up. Let's see what we're saying. There's MTR. There's Microsoft. Let's put it in the Microsoft spot. Or let's just add. I'll just copy and paste it and put a new one in. And let's take a look at the Exxon Mobil. And then when we have our beta back up, we'll be able to. You know what? I think we can actually find. Let's do this too. I remember the symbol. Matter of fact, I know the symbol. The symbol is for the energy company down in Spain. What is that symbol? The symbol is ENG, right? ENG.M something. There it is, ENG.MC. So let's put that in there. See how both of them are. ENG.MC. There it is. Now you can see on this, before I put mobile in, pretty much unchanged. So Europe is, even with all that action going on in North Sea oil and natural gas in the United States, because our wondrous leaders at the moment have blocked the use of selling natural gas to Europe. I don't know why. We got so much of it. We could give it to them for free half the time, just for transport costs. Help the Europeans out, or anybody else on the planet that needs natural gas, and just pay for the transport cost and buy them lunch or something. I don't know. I mean, we got so much of it. Yeah, you can see there. You can see they're smacking that down this morning. Look at that. It's down. Let's see. It closed on Friday at $120.47. Today is at $116.85. So it's down, about 3 3/4, almost 4% drop. So, and you can see here, it's been in a weekly buy throughout most of this blow up action. But look at this. The fast broke down last week, and it's, you see it's a cute little bounce trying to develop today. But so when it came in a sell just like the way crude oil did. From there we and then did I show you the? Oh, I'm not showing you that. Here you go. This is Exxon Mobil, and there it is right there. Look at that, smack down. And when that happens, that really puts pressure on the stock markets. The stock markets really start to take off. They really do. So at this point, I'd imagine we have a good chance at a good rally today. Matter of fact, we may have a Trump rally as far as I'm concerned, because all the numbers are pushing and showing that that he is ahead at the moment. Like I said, it's a voting season we do right now. We're going to try to go back like normal, back to just a one-day vote. But right now, the left in our country needs to have as many opportunities to find ways to get their people into power. And it takes 3 or 4 weeks of voting to figure out how to do it. So that is what it is. All right, from there we jump over to, let's see, that's Exxon. So we're done that. And so what we'll do is we'll drift over to, let's do a couple different things. Let's see, open workspace. I'll go with that, just that there. And then what we're doing is we're going to jump over and take a look at the world indices with a few minutes left. So we have here, that's the energy company down in Spain, kind of acting kind of chill, I guess you could say. That's the best way I look at it, is chill. Let's go take a look at the markets around the world. World indices right there. And you can see right at the top there, that's the S&P 500. I'm not sure. I think that's a short or something. GSPC 500. It's down when we know that the product is flying up. Oh, I see what it is. That they're showing us yesterday's actions, not today's. So let's go there and go like this, press on it, and then let's go like that. And that's not right. So I guess what we have to do is we have to put our own in there. So let's say here's the S&P 500. Let's see if it did it. Yeah, I think it did. We'll put the 3-month in there. Now, why is that showing a minus again? Oh, that's Friday. They're still not showing us today's action. Let's see if we can get the futures contract. So that would be ES equals F. There we go. There we are. That makes sense. They're not showing you that right there. And now you can see here. How do we do this? Can we widen this? You see it right there. It's lifting up. It's trying, it's definitely nice and green there. It's trying to do it. Let's see, 5 days. I guess we can go like that. You see, it's trying to climb back up to that high there. That was 599. Right now we're at 5,800. Was it 5,900? It's 5,900, and right now we're at 5,880 basically. So we're only like 20 points away, which is nothing. You can see it's up 33 points as we speak there now. So we might get it's up a half a percentage point. We may get like a blow-off rally over the next couple of days. That's a possibility. Let's see, NQs, they're already lifting. They're not even looking back. Check this out. That's today. It's already up into that. Let's see if we can get the high. You see this is trying to go to all-time highs already. That's 3 months back. We go 6 months back. And okay, so there's the all-time highs at 20,983 basically. Right now we're at 20,650 basically, 983. So it's like 300 and some odd points, which is nothing for this product to be up 200 or 300 points in a day. This thing has, this is like the modern economy. This has it all. It has Microsoft, and it has Intel, and it has NVDA, and it has Cisco Systems. It has Tesla. It has everything. Google. It has all the modern Meta. It has it all. It has all the majors. So it's they call it the Tech 100. It is the top 100 tech companies, and right now the world is being powered by tech, and that's really what it comes down to. Let's see if we got our system up and running. Nope, not yet. But soon. Soon. All right, traders. We will catch you all tomorrow. Oh, one last one I want to see. I want to see what China did, since China is a major player in the marketplace. So it's what? 0, 0, 0, 0. There it is. The Shanghai. Is that it? There's a few of these things here. Maybe that's it. No, that's not it. Something was there. 3,000. That's what we're expecting. 3,000 something. 0, 0, 0, 0. The Shanghai. We want the Shanghai. Maybe that's it. There it is. Up 22 points, and you can. It's been climbing since the sugar high. I mean, that's pretty much what it comes down to. And there's talk that they're going to add more stimulus. I mean, they have to. They are so under stimulus. They've only put in one trillion. They need to put in about at least somewhere's around 20 to 30 trillion. Anywhere's in there would straighten it all out. But I don't know if they have that type of money. All right, traders. This is Doc from North America. We got the title in there about the G7 and the BRICS should compete. And we'll catch you all tomorrow. Same time, same channel. More than likely with the beta, no problem. All right. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Ta-ta for now.